Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. National Company Law Tribunal admits GoFirst's voluntary insolvency plea, grants it moratorium on recoveries by lessors and lenders, directs the insolvency professional to maintain the airline status as a going concern. CEO Kaushik Kona terms the verdict historic, says the judgment will allow the airline to remain viable. Retail inflation in the United States slows to 4.9% in April, lower than Wall Street estimates, also lower than the 5% rate in March. This is the slowest annual increase in inflation since 2021 of April. However, the number is still well above the Federal Reserve's desired inflation rate of 2%.
The one thing I believe, beyond a shadow of a doubt, is that for the next decade, this is the biggest growth opportunity that we have as a company.
Tech giant Cisco bets big on India. Global CEO Chuck Robbins says that the India story will be Cisco's biggest growth opportunity over the next 10 years. Tells CNBC-TV18 the company will set up a new manufacturing facility in Chennai. Hopes it will be up and running in 12 months. Retail giant Walmart reiterates its commitment to the India story as the retailer's top brass meets with the Indian vendor partners and suppliers. CEO Doug McMillan says that the firm is on track to export goods worth $10 billion per year from India starting 2027. Infra major L&T's fourth quarter margin misses streets' expectations, but order inflow remains strong. Company beats FY23 revenue guidance of 12 to 15%, reporting a 17% growth. Management says it will focus mainly on large project wins and timely execution of large order book. Yet another CNBC-TV18 news break is confirmed. JSW Infra files IPO papers with market regulator SEBI for a 2,800 crore rupee issue. Company to use the proceeds to fund its expansion plan and retire debt. This is the first IPO from the JSW Group in over 12 years. India's FMCG sector is on a path to recovery. A Nielsen survey highlights rural volume growth turning positive after 6 quarters, and overall industry growth is up more than 10% in the first quarter of this year. The exit polls for Karnataka hint at a photo finish between the Congress and the BJP, with neither party getting a majority. A Network 18 poll of polls has the Congress winning 100 seats and the BJP winning 98, making JDS a kingmaker. Pakistan's anti-corruption agency gets 8 days custody of former Prime Minister Imran Khan a day after arresting him in connection with an embezzlement case. Khan is also indicted in another case related to unlawful sale of state gifts. A jury holds former U.S. President Donald Trump liable for sexually abusing columnist Jean Carroll in 1996 and then defaming her. Orders him to pay $5 million in damages. Trump says he will appeal the verdict, calls it a disgrace. Well, straight to action now from Dalal Street. Markets close with modest gains amidst volatility and with the Nifty holding on to the 18,300 mark. A recovery in the last hour of trade helped Nifty Bank gain 150 points. However, PSU banks remained under pressure along with the IT and pharma stocks. And while the consumer prices in the United States increased by 0.4% from March to April, marking a sustained increase in the cost of living on a yearly basis. The rate of inflation rose to 4.9%, beating Wall Street's estimates. This has been the slowest annual increase in inflation in the last 2 years. However, the number is still well above the Federal Reserve's desired inflation rate of 2%. And back home, in a major relief for GoFirst, the Company Law Tribunal has admitted the cash-strapped airline's voluntary insolvency plea and has granted it protection from recoveries by lenders as well as lessors. The tribunal has directed the initiation of insolvency proceedings against GoFirst. It has also directed Abhilash Lal, the insolvency resolution professional, to take all steps to maintain GoFirst's status as a going concern. The earlier management of the airline has now been suspended. However, the NCLT has directed that none of the employees are to be laid off. The NCLT has also asked the Go First management to deposit 5 crore rupees with the resolution professional to meet immediate expenses. Go First CEO Kaushik Khona welcomed the order, calling it a historic judgment in terms of pace of proceedings. Take a look.
I think it's historic, and I think it's millions of prayers have been heard. I think it is also historic in the sense that the purpose of IBC, which is to preserve a viable business before it becomes unviable, has been really salute over there. That's the basic purpose of the Section 10, where we wanted that the airline should preserve its assets, it should preserve all its viable opportunities to survive. And one of the major issue which we have is to get the Pratt & Whitney engines, and I think that is what the arbitral award means.
One issue that has to be resolved here is how in future airlines are going to manage their purchase of engines. If you look at the engine market today, it is controlled by GE, Pratt & Whitney, Safran, and Rolls-Royce. Right now, I believe it has got 11,000 crores in debt. How much it owes to the bank, how much it can get by way of working capital to run the airline on a going concern basis. This must be his immediate objective.
Well, this NCLT order may not be the end of the story. Important to point out that at least one of the lessors in question, which is SMBC Aviation, has moved the NCLAT and will, in fact, be seeking a stay of this NCLT order tomorrow when the NCLAT takes up that case, that hearing. Meanwhile, engine maker Pratt & Whitney has once again clarified that it has nothing to do with the deterioration of Go First's financial health. Remember, Go First had said that it has sought compensation of approximately 8,000 crore rupees from Pratt & Whitney in the arbitration at Singapore International Arbitration Centre. In its latest statement, Pratt & Whitney has said that Go First's allegation that it is responsible for the airline's financial condition are without merit. The engine maker added that it will vigorously defend itself against Go First's claim and is pursuing its own legal recourse. Well, the big news maker of the day, global technology firm Cisco, is looking to expand its India footprint. The company is looking to set up a manufacturing facility in Chennai. Speaking to CNBC-TV18's managing editor Shireen Bhan, Cisco CEO Chuck Robbins called India the biggest growth opportunity for the company for the next 10 years. Robbins also spoke about the rise of generative AI like ChatGPT. He has said that the technology presents opportunities, but also warned about the risks and called for guardrails to be put in place quickly.
We actually have made a decision to build a full manufacturing node for Cisco, global node, that we will use both for building products for India, but we'll also be exporting out of India to the region, to Europe. The one thing I believe, beyond a shadow of a doubt, is that for the next decade, this is the biggest growth opportunity that we have as a company. And so if you take that statement, then you would translate that to this would be one of the biggest investment areas that we'll have over the next decade. And I think this is just the very beginning. The recent emergence of these models for generative AI are going to create lots of opportunities. We do need guardrails pretty quickly just so we can understand it a little more. So inside of our company, we've actually done that. We've put guardrails up with our teams, and some of them want to go really fast. And I said, we need to understand this. We need to make sure we have the processes in place. We need to make sure we don't have any risk of exposing customer data to these these platforms. We have to make sure we have our intellectual property protected. I mean, there's a lot of things that can go wrong and already have that you've read about in the press. And so what I've told our team is we're going to slow down a little bit.
Well, you can catch that entire conversation with Cisco CEO Chuck Robbins on our special show, Global Dialogues, at 10:30 p.m. right here on CNBC-TV18. And while the world's largest retailer, Walmart, has said that it remains committed to India and is here for the long term. Addressing Indian suppliers and partners, CEO Doug McMillon said that the firm is on track to export goods worth $10 billion per year from India starting 2027. He added that the focus remains on India's unique ecosystem of suppliers, which he believes will help achieve this target. And shifting gears to the auto sector, MG Motor has said that it plans to offer majority stakes to local partners over the next 2 to 4 years. This as a part of a 5-year business roadmap in the country. Speaking to CNBC-TV18, President and MD Rajiv Chhabra said that the British brand is speaking to multiple partners and has not yet finalized on any one of them. Listen in.
In terms of Indianizing the operations, it's basically Indianizing the management, Indianizing the board, Indianizing the shareholders, and the whole governance part. So on the shareholder side, we feel that majority of our company would be owned by Indians in the next 2 to 4 years. We are planning to raise north of upwards of 5,000 crores through this exercise in the next 2-3 years, and that should take care of the second plant. Also should enable us to launch 4 to 5 new products. Also, part of it we are going to invest into charging infrastructure.
Well, here's a CNBC-TV18 news break that has been confirmed. JSW Infra has filed IPO papers with the market regulator SEBI for a 2,800 crore rupee issue. The company plans to use proceeds from the share sale for expansion and for retiring debt. Ritu Singh now joins us with more details. Ritu, take us through the contours of this IPO.
You know, this is the first IPO coming from the JSW Group in more than a decade, so a significant one to watch out for. As we reported earlier today, JSW Infrastructure, which is the ports business of the JSW Group, has filed the DRHP for its initial public offering with SEBI as of the 9th of May. It plans to raise up to 2,800 crore rupees through the IPO route and will deploy these funds to retire its debt and also to fund its capacity expansion projects. As far as the debt is concerned, the net debt stood at about 2,875 crores, which was the last figure that we have. The JSW Infrastructure IPO is actually the third public listing by the group, and it follows 13 years after the public listing of JSW Energy, which was in January of 2010. Now, JSW Infrastructure promoters, we understand, will not be diluting their current stake in this IPO. JM Financial, Axis Capital, Credit Suisse, HSBC Securities, these are some of the book-running lead managers to this issue. Now, as of December 31st last year, JSW Infrastructure had an installed cargo handling capacity of more than 153 million tons per annum. And as part of their strategy, we understand that the company wants to further expand its asset portfolio and grow its operations by evaluating acquisition opportunities. And so this IPO is going to be critical. The equity shares of JSW Infrastructure are proposed to be listed both on the BSE and the NSE.
Right, Ritu, thanks a lot for that. Let's shift our focus to the earnings space now. Larsen & Toubro reported revenue growth of 10% despite missing Street's expectations. Order inflow crossed 2 lakh crore rupees for FY23, and this figure was up nearly 20% compared to the last year. The company also beat its FY23 revenue guidance of 12 to 15%, reporting a 17% growth. The company has announced that A.M. Naik will now step down as a non-executive chairman of the company and will be conferred the status of chairman emeritus. The board has named S.N. Subramanian as the new chairman and managing director of the company. Dr. Reddy's numbers also missed Street's expectations for this quarter. However, on a year-on-year basis, the company's revenue grew by 15%, while margins saw a 2% jump. The pharma giant has recommended a final dividend of 40 rupees per share for FY23. More from pharma. The pharma major Lupin posted a strong fourth quarter performance, beating Street's expectations. Revenue was up 14%, while the margins rose to a 7-quarter high. The drug maker believes that FY24 margins will cross the 15% mark and is aiming for a long-term margin of 18%. Well, sticking with the results reported today, FMCG major Godrej Consumer posted a strong fourth quarter, beating Street's expectations on all fronts. Profit after tax rose by 24% year-on-year, while margins surged by 20%. The company also posted its highest sales growth in the last 5 quarters, with revenue growing in at 10% as compared to last year. And speaking of FMCG, the sector is showing signs of revival in consumer demand. And that's as per Nielsen's IQ quarterly report. The industry's volumes have turned positive in the January to March quarter after 6 quarters of a decline. Now, the report expects India's FMCG sector to grow between 7 to 9% this year. Shilpa Ranipeta is joining us with more. Shilpa, take us through the highlights of this report.
Well, Nielsen IQ's data is an indication clearly that the worst seems to be behind for the FMCG industry. After months of pressure on rural growth and on volumes, the FMCG industry has seen a value growth of about 10.2% in the Jan to March quarter of 2023, and FMCG volumes have turned positive for the first time after 6 quarters. They grew about 3.1% in the last quarter. Remember, the quarter before that, which is the October, November, December quarter, it had declined by 0.3%. And the same quarter last year, in 2022, it had seen a decline of 4.1%. So there is a revival coming in rural areas. In fact, in the quarter gone by, several FMCG companies that have reported results also have said that there is a recovery that is being seen in rural. Urban, however, was anyway growing. That has also grown about 5.3% in the last quarter. Now, Nielsen IQ says that the growth is driven by a revival in consumption, both in rural markets and in traditional trade as well. And this is largely because there has been a stabilization in retail inflation, and that has aided consumption. Now, food categories grew about 4.3%, and this was driven by growth in staples. Non-food volumes, again, that turned positive for the first time after 6 quarters. Flat, albeit by just about 0.2% growth, but there is growth seen there, and this was led by home care categories. Personal care, however, continues to decline. Now, traditional trade, which was also suffering on the back of high inflation and low consumer demand, that is also charting a recovery with about roughly 2% growth. And modern trade, which was anyway seeing a healthy growth, that continued to grow at about 15% in the last quarter. Now, despite global uncertainties, Nielsen IQ has forecasted the FMCG industry for the year of 2023 to grow anywhere between 7 to 9%. It has said that what will be the tailwinds for growth will be the Union Budget's announcements on agriculture and capex, the RBI's growth forecast for the next fiscal, and the forecast of a normal monsoon. These will act as tailwinds. However, pressure on consumers, low confidence levels, and high unemployment rate could act as headwinds. Back to you.
Well, with that, it's time now for a short break. But up next, the exit polls for Karnataka hint at a photo finish between the Congress and the BJP, with neither party getting a majority. More details when we come back. Welcome back. Now, here's the big story. All eyes are on the Karnataka elections. Voting has ended and 66.91% of the state's registered voters turned out to cast their votes. Now, the final numbers will be announced on Saturday. That's the 13th of May. But in the meantime, let's take a look at various exit polls to see which way the wind may be blowing. Now, overall, the exit polls predict a hung house. 3 polls have given the edge to the Congress, while 2 have the BJP with a slight lead. However, none of the polls have projected a clear winner. None of the polls have either the BJP or the Congress getting the magic number of 113. So, if any of these scenarios play out, the JDS will get the opportunity to emerge as the kingmaker once again. So, let's take a look at each of the big exit polls released today. The exit poll published by Jan Ki Baat showed numbers overlapping in a major fight between the ruling BJP and the opposition Congress. The poll predicts that the BJP is likely to back the most seats, while the Congress may secure 91 to 106, making this a close fight. Similarly, the CGHS exit poll predicts that the ruling party will have 114 seats, while the Congress bags 86. On the contrary, Pollstrat's poll estimates Congress leading with 99 to 109 seats, while the BJP trailing with between 88 to 94 seats. Similarly, Matrice's exit poll projects Congress leading the race with 103 to 118 seats in the kitty. PMark also projects the Congress leading with 94 to 108 seats and the BJP in second place with 85 to 100. However, the poll of polls projects a much narrower race. It has the Congress leading marginally with 100 seats and the BJP trailing the Congress by just 2 seats. The JDS is projected to bag 24 seats. That would make the JDS a kingmaker once again, because whichever party it partners with can then claim to have crossed that magic number. Well, we'll of course continue to get the latest from the state of Karnataka, but shifting focus now. Policy consistency, plugging the gap between the industry and the academia, and the need to boost India's competitiveness. These were some of the key areas marked by stalwarts from India Inc. Speaking at Amitabh Kant's book launch, Made in India, 75 Years of Business and Enterprise, the corporate giants discussed how India can boost its economy and what the government can do to match its global peers.
You know, you've given yourself 4 to 5 years' time, because that's what the PLI is all about. The PLI says that you're going to grow bigger in 5 years' time. That's your target. And you're going to become a major exporting nation. We are going to support you in terms of size and scale to become a global champion in 5 years. But 5 years, India must become more productively efficient than any other country in the world.
What we are looking from the government, whether it's nearshoring, friendshoring, enemy shoring, is consistency of policy. Businesses are not built for a day. We build businesses for decades. So if we know that this is the road, we can choose how fast or slow to go on that road. But if the road is going to have curves in it which we can't see, that adds to risk.
If you really look at countries which have done well, there actually exists an ecosystem which translates research in the lab to pilot to scale, you know, and I think there's typically a value of death, which in technology terms you call TRL 4 to 6, which is technology readiness level 4 to 6. Typically, academic institutions take it from 1 to 4, and industry takes it from 6 to 9 or 10. This 4 to 6 is the place where it falls. You know, it's not scaled up, it falls between the lab and the market. And I think that's where, if you look at many countries, they bridge that gap very well. And I think we need to do that.
We cannot just be, and China did succeed somewhat in feeding its domestic market, but its real growth came from export. We need to export, and in order to export, as you rightly said, we need to be competitive. And how are we going to be competitive when the factors of production are not competitive?
Well, 1 in 2 corporate employees are prone to mental health risks. So says a survey by Empower, an initiative by the Aditya Birla Education Trust. Now, the survey covered 3,000 corporate employees from 8 cities and 10 sectors, including e-commerce, FMCG and hospitality. As a part of CNBC-TV18's Mind Matter initiative, Kiran Khatri and Shilpa Rani Peta bring us the highlights of this report.
Tired, stressed employees are quite common in any office, and research says that such employees have trouble with productivity. These are signs of poor mental health. What's alarming, however, is the high instance of such employees in any organization. A survey by Aditya Birla Education Trust's Empower initiative reveals that about 1 in 2 corporate employees is at risk of poor mental health. The poll, which covered 3,000 corporate employees from 8 cities and 10 sectors, shows that nearly 8 in 10 employees have skipped work for at least 2 weeks in the past year due to mental fatigue. 9 out of 10 employees feel they lack a work-life balance.
A lot of people that I see come to me saying, you know, they're working odd hours, their family life is suffering, they just don't have time for themselves. So clinically, we are seeing all of that and the impact that it is having. But I think for us also, it was quite startling that people were now vocalizing the fact that they were, you know, they felt that they didn't have work-life balance.
Mental health risks are gender agnostic for the most part. But when it comes to the workplace in India, the survey says female employees are more prone to mental health issues. 56% of the women polled were found to be at risk compared to just 41% of the males. One of the key reasons identified for this is that female employees feel they face more gender bias and stereotyping. An overwhelming 80% of the female respondents felt they have faced stereotypes pertaining to maternity leaves and menstrual cycles, as well as a feeling that they may put the job second once they get married. India's booming e-commerce sector ranks the highest among the 10 sectors assessed for being high risk when it comes to mental health. 64% of the respondents from this sector were found to be at risk of poor mental health. The FMCG, automobile, healthcare and hospitality sectors also scored over 50%, making them high risk. So what are the predominant factors affecting mental health at the workplace? There are 4. Work-related stress, including long working hours without breaks, problems on the home front, anxiety over finances, and physical health related concerns.
About half the respondents said they are not satisfied with their salaries, and nearly 70% felt that they are expected to work even when on vacation. Experts say the survey highlights the pressing need for employers to create a safer work environment, identify early signs of poor mental health among employees, and normalize mental health leaves.
Start the correct work culture. Create a safe environment. So where mental health is not stigmatized, so there's awareness of mental health, change the policy, have a mental health leave policy. Encourage people to talk about mental health so it's not stigmatized. What they need to stop doing is judgment. For example, when somebody says, I'm really upset, and people say, "Arey, jaake walk kar lo." Stop doing that. Stop that judgment. Stop giving those unscientific solutions to somebody's problem.
The report also recommends offering health and wellness programs, addressing gender inequality, and promoting flexible work arrangements. In Mumbai with Kiran Khatri, Shilpa Ranipeta.
Well, with that, it's a wrap on this edition of India Business. Thank you so much for watching. News and updates continue right here on CNBC TV18.